Good morning, traders. I'm Dennis Dick, and this is Premarket Info. On this morning's show, we're going to talk about the BATS Exchange's plans for its new dark pool. Following the NYSE's lead, BATS has announced last night that they will open their own retail liquidity program. Deere misses big time. Stock is trading down almost 5 points here. Well, we have earnings reports to discuss from Target, Abercrombie & Fitch, and JDS Uniphase from last night. Cisco will report earnings tonight. We'll look ahead at that stock. And Google made a new 52-week high yesterday. First, I want to just start out talking about the BATS Exchange. Basically, BATS, NYSE announced and came out on August 1st with their retail liquidity program. Basically, this program is just a program that's going to interact with retail market orders for the most part. So if you're trading at a TD Ameritrade, if you're trading at any other retail brokerage house like a Scottrade, these orders basically come into the market and are typically intercepted by what participants who are known as internalizers, and some of these are high frequency internalizers. These guys basically get a sneak peek at this retail order flow and will step ahead and trade against those orders that they think are basically on the wrong side of the market. They do this by stepping ahead of the NBBO. I've called this sub-pennying. We've called this game, this retail liquidity providing game. Basically, it's just a way to step ahead of the order queue. For example, on a stock like Bank America, if the best bid is $7.78, and the best offer is $7.79. If a market order comes in to sell from a retail brokerage house, these guys will often buy the stock for a fraction of a cent better at $7.7801. So they basically jump the order queue. They jump ahead all of the other participants who are on the bid, and they justify this by offering this price improvement. Well, the exchanges were getting sick of this because all of this volume was going off exchange. So they applied, and the SEC granted their 2 months ago permission to the NYSE to participate in this program as well. So basically, the NYSE will have a type of high frequency market maker that will now step in front of and take advantage of these market orders, and they offer this price improvement. And the justification is that right now, sometimes they don't get any price improvement at all from these internalizers. But if you look here, it's a 1/100th of a cent. So sometimes you get 1/100th of a cent. The NYSE has said that they will give a minimum of 1/10th of a cent. So you're going to get more price improvement to these retail orders, but it still doesn't really justify stepping in front of this displayed liquidity provider. Nannix was saying that it's kind of like robbing Peter to pay Paul, where they will justify and say, oh, well, we're giving price improvement. Well, if you're giving 1/100th of a price improvement, where the other 99/100ths of a price improvement is going to be lost to the overall market because the participant that is bidding at $7.78 has to pay up when they don't get executed. So there's basically three participants. There's the participant, the retail order that is coming in. There's the participant that's actually bidding, who is the liquidity provider, and then there's the HFT internalizer / market maker who's taking advantage of the retail order, and who's taking advantage of the limit order that's being displayed and giving a little fraction of a penny to the retail order that's coming in. So in a nutshell, this is all a lot of complicated talk for you guys at 8:30 in the morning, but in a nutshell, basically more limit orders are going to be disadvantaged. So if you're placing limit orders onto the exchange, there's less of a chance for you to get filled. And now BATS is going to participate. You can bet that all the other exchanges are going to participate, and more order flow is migrating to the dark. And as we continue to lose more and more order flow to the dark, that just creates this whole lack of liquidity in the displayed market. We have plenty of liquidity in the middle of the day, but at the open and at times of stress, we don't, because we know high-frequency traders don't have affirmative obligations, and they won't provide liquidity when there is risk. We've seen that. I've pointed that out at the open when there's price uncertainty, that the high-frequency traders aren't providing liquidity during these times. Well, when you have more and more high-frequency traders that are allowed to just intercept orders without displaying intentions, and that's what these retail liquidity programs are doing, that just opens up less liquidity again. I mean, why bother bidding for the stock if you can just basically intercept the orders as they come in? You don't have to risk anything because you don't have to have your bid or your offer out there, so you don't risk getting picked off, and you still get to participate and trade against the orders that you like to trade against, the dumber orders, for lack of a better word. So I totally disapprove of this program. We've talked about this type of stuff for the last 3 years. We've actually written comment letters to the SEC. Doesn't appear to be listened to our comments because more and more volume continues to migrate to the dark, and it's just bad for overall market structure. But that's the overall story with the BATS exchange here today. It's just one more exchange. Now, BATS will still have their lit operations as well, but they will allow participants to trade off exchange, basically hide their intentions, and still reap the benefit of getting order executions. So I feel like you should put everybody on a level playing field where if you want to be able to buy the stock, bid the stock and show your intentions. You shouldn't be able to participate and buy and intercept market orders when you don't even have limit orders out there. Everybody else that's bidding at 778 is disadvantaged when a participant can come in and buy the stock for a fraction of a cent better, and everybody and the limit orders are just completely disadvantaged. So there's just no point to displaying liquidity when your orders can be stepped in front of at the moment it's about to be executed. So going on to the markets today, because I don't want to stay on market structure all morning and bore you guys. The market here, we've got the market trading down a couple of points here. We actually rallied up a little bit earlier there yesterday. We had, just going out to the chart from yesterday, we got up to 1409.25. So we did get up and we broke above that 1404 area that we had highlighted. But we only stayed above there for a few hours and we started to break down. It could potentially be a fake out as opposed to a breakout. We were saying that it is breaking out, but if it doesn't get back and hold above this 1404, I'd start to get nervous. And there is some room, and there is some reasons to be nervous today because you have Deere coming out. They missed their earnings report by a landslide here. The stock is trading down over $4 in the pre-market at 75.78. Stock closed at $80.13. Overall, the stock, the numbers are made $1.98. Estimates were up at $2.31, so they missed big time. They cut their full year earnings forecast, so nothing good with Deere here today. Caterpillar is actually trading down in sympathy with the stock. A lot of people paired those two stocks together, and Caterpillar is trading down at $1.30, trading at 86.44. So just going back to the Deere for a second though, 75 had been a big number on this. I don't see a heck of a lot of support until you get down to this low we had back on July 27th, which was 75.23. I think in this whole 75 area you might find some support. And this stock, it seems it's been on a pretty good run, so you may get some bottom pickers here coming off the bat. Wouldn't surprise me if this whole $75 area did hold up at least off the hop. Target reported earnings here too, and Target is actually trading higher on their report. They made $1.06 against estimates of $1.01. They raised guidance. They see now 83 cents to 93 cents for the next quarter. Estimates were down at 76 cents. So Target is up almost $1 here, trading at 64.20. Actually, interesting enough, when the report came out at 7:30 Eastern, it gapped down quickly to $62 off the initial report. Just about 1,000 shares just initially traded down. Not sure exactly why, but then it bounced up, and the report was obviously good. So maybe whatever algorithm or whoever hit the panic button. I'm not even sure if it was an algorithm. It could have just been one trader hitting the panic button for whatever reason, and hit $62. But the stock has bounced up and is trading higher in the pre-market now. 64.20 is where it's trading, so actually breaking out to new 52-week highs here on target. Just going out to the monthlies here, you've got to go back to 2007 to find these prices. So Target has been on a heck of a run here, and we start to open up. So it's hard to say where this one's going, but I'd expect you to find probably buyers onto pullbacks here. This whole 63 area was pretty decent resistance before. We did break above there in yesterday's trade. If for whatever reason target starts to pull back, probably the close of 63.38, you'll probably find some buyers. But I think if it continues to run, I'd look at the whole numbers as your bogeys, because there's always large institutional orders usually kicking around at the whole numbers, and the high frequency traders are usually stepping in front of those. So I'd expect some probably initial resistance in the whole 64.90 area if the stock continues to run up from where it's at. Abercrombie and Fitch reported earnings here this morning as well. Stock beat by a couple of cents, 19 cents against estimates of 17 cents. Is trading up here in the pre-market. $33 right now is where it's at. 32.33 is where it's closed. Looking at this chart, we've moved up. We went into this whole gap area. We have now filled this gap, but I don't see a heck of a lot of resistance on this one again until you get up to this $35 area. But they didn't beat by that much. It's not a landslide beat here, so it's hard to say. I don't think the stock's going to rally another $2 here. I think if you get up into this 34 area, you'll probably find resistance up there. But this is one of those, wouldn't surprise me if it opens up and then does find some sellers, because the report was okay but wasn't fantastic. So I don't think this one's going to take off and rally $2 or $3 here today. JDS Uniphase reported earnings here last night. Stock is trading up. 11.08 is where it's at right now after closing at $10.68. Believe it or not, the stock got up to $11.73 last night after the report. That was definitely an overshoot. If the stock is to continue up there, I think you find resistance up at 12, but I don't think you'll see that 11.73 area at all today. 11.38 is the high from August the 13th. I think that's probably your first area of resistance. We were consolidating. If we look back even to July the 3rd, we had a high of 11.30. So I'd call that whole 11.30 area your first initial area of resistance. And one thing to keep in mind is these stocks. This one's had a pretty good run the last month, but overall this year it hasn't performed great. So it wouldn't surprise me if sellers come into stock like this too. But they did beat 15 cents versus 12 cents. Cisco will report earnings tonight. Obviously, this one has had a decent run here in the last month, bouncing from the whole 15 area, getting up and closing actually at 17.17 yesterday, trading up about 7 cents here this morning, 17.24. If you do start to get above this 17.79 area for you guys, and this isn't for today, but for you guys that are going to trade this thing after hours, there's not much between 17.79 and 18.48. You have this whole gap area that, again, the stock is trying to fill. Gaps basically get filled quickly because there isn't a lot of reference points, so there isn't a lot of traders that have positions on from pricing points in this area, which is why the stock can move quickly through gap areas. So if the stock is to get above 17.79, it could probably move fairly quickly up into this whole 18.48 area where the bottom of this gap was. So I'd keep that area in mind for that gap area if you're trading it tonight. The stock starts to pull back. You do have this kind of double bottom here in the 1681 to 1686 area. But again, I've seen Cisco move $1 or $2 sometimes off earnings, so you never know with this issue. If it's an ugly report, you never know. It could even move all the way back to $16. If it starts to look good, though, keep an eye on that 17.79 high at first, and then after that, 18.48. Chevron I just want to talk about because it went ex-dividend here today. Made a new 52-week high yesterday in this whole 113.87 area. Huge institutional selling pressure up at 114. Obviously the high-frequency traders sniffing that out yesterday, making the stock top out at 113.87. Stock is pulling back a bit here. The adjusted close is 112.42. That's adjusted for the 90-cent dividend. It's trading right now at 112.13, so down just a little bit from there. So it'll be interesting. We've been on a heck of a tear here really in this stock. You now have the stock going ex-dividend, and sometimes there's a run-up before the ex-dividend date, and then as people are unwinding their dividend positions, sometimes the stock will find some selling pressure. So keep the adjusted close in mind of 112.42, because that's the break even for anybody who took the stock home overnight to capture the dividend. Obviously above 112.42 these guys are in the green. If it starts to really pull back here, you got a low from just a couple days ago at 111.28. You may find some initial support in that area. Google was on a tear again yesterday, making a new 52-week high for Google, 672.85. Did pull back towards a little bit towards the end of the day, just looking at the last yesterday's chart. Pulled back a bit, but is coming up a little bit here again, 670.20. Stock continues to be an outperformer. Apple did pull up earlier on, but then pulled back later on. So it was kind of going with Google early, had this initial run going with the Google, but then pulled back significantly. Bounced off this little 630 area support, Apple, and is actually trading up here this morning at 633.16. Few highs here in the 635 area that might give you some initial resistance if you're trading Apple. Goes to pull back. I'd keep an eye on yesterday's low right there at 630.61. And if it really starts to pull back, then it starts getting under 630, it starts to open up there again. So if you're playing Apple from the long side, I'd get a little nervous if it starts falling below 630. But as long as Google can continue to march higher, it might pull Apple up with it. Just one more I wanted to highlight here is Facebook. Facebook starting to sell off there yesterday. I do still have a position on in Facebook, but I'm keeping a very close watch on it here. I ended up buying it 4 or 5 days ago in 2060, I think is where I ended up buying it. The stock pulled up and I actually got up almost 2 points. I guess I should have got out and been a day trader here. But I was holding it for a longer term trade, a longer term swing trade, hoping that the bottom was in. 1982 is the low. This thing starts to cut out, make new lows, I'll be out of my position. I don't like holding stocks that are making new all-time lows in the case of Facebook. So 1982 is the bogey on this one for me. I'd keep an eye on that too if you're trading it. If it starts to break down below $20 and starts to trade below 1982, if you're long the stock, I'd probably get nervous. Obviously, we've seen Facebook break down multiple times in the past, so it's critical that 1982 level does hold for Facebook. General Electric topped out again in the same area. It keeps topping out here at 2111, 2112, 2110. Basically 3 of the last 4 days the stock has topped out right in that whole area. Gets up there. So I'm going to call that whole area triple top and major resistance now. So if you're trading GE, it gets up to this 2109, 2110 area, 2111 area. It's really finding sellers up there. So if you are trading it and it gets a rally from here for whatever reason, keep that area in mind. If it starts to break down below this 2088 level, it starts to open up here again. And with the triple top in place, the chart is starting to look a little bit scary from the long side. So I'd be cautious on the buy side on this, and I'd probably be a seller of rallies on this General Electric. Until it can get up and start to make new 52-week highs above that 2119 level, I think the trade might be to sell bounces in this one. Just going back to the market here, obviously we pulled back from making a new high there yesterday. I think it's critical the market continues to hold this 1394 area. If it starts to, obviously this whole 1390s has provided support. I would expect it would provide support at least initially here again. Hopefully this market can hold up. 1387 is really the big critical number that I've highlighted here. 1387.50 where you had a double bottom from the 6th and the 7th. As long as we hold above there, we're still in rally mode here. If we ever start to break down below that 1387, that's when I'd really start to get nervous. That's our show for today, folks. Joel will be back with us tomorrow. And once again, I'm Dennis Dick for Premarket Info.